the stock market means many of you want more detailed analysis and stocks that I like and don't like, and how long I think this pain and torture will continue for you as you long for the days of dopamine hits of the last decade. Well, as you've known, this is the S&P 500 weekly chart, obviously. As you've known since January, when we've been seeing downward momentum each week, I've kept saying, well, I'll wait another week before I deploy cash. And those weeks have gone by, and even the weeks which then went up didn't give enough confidence before they fell again. So you're left with a lot of cash on the sidelines, either fresh money or money from sales of other equities that you've already had. Has that changed this week? No. Nothing on that chart suggests to me that I'd be bullish. However, let's have a look at where we are. Where is the momentum? Well, this is the momentum. That's the weekly returns over the past 5 working days. And what you can see is, yes, energy has momentum, diagnostics and research in the healthcare area. So does credit services, some of the banks, regional and diversified, and basic materials, a few utilities as well. Well, are we going to pick on momentum alone? Of course we're not. We might end up with the Netflix, which goes up for a day and then burns again. So momentum is one thing we may well look at, but it's not the only thing. A bit more useful might be valuation, price earnings ratios, a lot more red there. And the first map and the second map, is there much overlap in green? Not really. You've got some in oil and gas on lower price earnings, and banks again, banks diversified again. And a few of the basic materials, again, insurance. So overlap there, clearly not in many other areas. One of the more interesting valuation metrics, which is useful right now, I know my face is blocking out Microsoft, there you go, 1.62, is price earnings growth. If that's below 1, it suggests the company is undervalued. Now here, again, we get energy companies which tick the momentum box and 2 of the valuation boxes. Interesting. As do some of the financial ones. When you get greens across different filters, that is more positive than having, say, a green on Amazon, which means it's a bit overvalued but negative on other things. Okay, let's look at some of those big bellwether stocks. I love that word, I don't know why. Apple, weekly, still looks like it's going to continue falling, so I'm afraid my beloved Apple, I got out of. I don't want to hang around, I get back in. I like it, so I know I will be getting back in at some point, but unlike Warren Buffett, whilst I don't trade my investments, you know, seeing weeks and weeks of falls likely to continue. I didn't get out of it this week, got out of it in batches. So in January, 10% ease off a bit. Oh, this doesn't look like it's going to end. Another 10% a couple of weeks later. This really doesn't look like it's going to end. And so gradually, of course, if I had a time machine or a crystal ball, I would have got out of all of it on the 1st of January. Microsoft, similar story. Great company, still like it. Nothing wrong with it. But I can't be bothered watching the downward declines. I will get back into it at some stage. I'm not trading my investments, but the momentum seems very much to the downside. Okay, Amazon, similar kind of story. That's had more of a move down, but we'll wait till we get back in until the deal is great. It's a bit like you sell a company to somebody and then you say, right, I'll buy it back off you cheaper. Meta, similar kind of story. There'll be a time when to get in, but right now is not that time. Costco I've got rid of as of this past week because it's 25% off its highs, and that's one of my rules. If it drops 25% off its highs, or I've had it for 12 months, I get out of it. PayPal I've continued holding. Now this is unusual. You might say, well, why the hell did you hold that and not the others? Or why did you hold this and get out of the others? First of all, I didn't expect it to fall this much, but it will be one which I'll be buying more of at some stage. I will wait. I thought it was going to be around here. Thankfully, it wasn't, and I didn't get in, and it's gone down even cheaper. So there's a bit of a bargain on this at the moment. I think it's fundamentally sound company. I haven't finished. As well as looking at campaignforamillion.com, you'll want to know what the great data points are of this past week. Well, one thing from Goldman Sachs that I want you to look at, other than campaignforamillion.com, is this. You see that little dead cat bounce we got, and you saw it in the S&P earlier in some of the stocks. Well, we've still got 32%. We've still got a bit of time to go. I'm afraid, my friends, this pain could continue well past this year. But don't worry, I've got some good news for you. Pyramid of equity returns. Look at all those lovely years where you get positive returns, and a few where you get extremely positive returns. And yeah, I'm afraid not so good ones as well. What's it going to be this year? I don't know. Don't have a crystal ball. I know how I can react though, and this helps me. So if you're risk averse, and in a falling market, nothing wrong with being risk averse. I'm risk averse. You'll wait to deploy your capital, as you've heard from my talks, my presentations on Telegram and YouTube and all my social media channels. You'll sell any weak losers. In other words, those which you've not quite held for 12 months, but are down not quite your 25% from the peak. But you're thinking, I just want to take off some money and ease off. Okay, you'll still hold potentially the fundamentally sound companies if you wish, or you might even get out of those. If you're partially risk averse, you might be even looking at exchange traded funds, but you'll probably be waiting to deploy capital. Forget about being risk loving, other than what I call my special strategies. And in my special strategies, yes, I bought things like Katera Energy, Devon Energy, and some of those. They're on my Telegram channel, the ones that I liked. And those were special strategies because they were the top 8 performers for the first 5 months of this year. And statistically, if you tend to hold those for another 12 months, you're going to do rather well. Probably get closer to the upper 30%. S&P 500, where will it go? Probably to figure 3. 2 and 3. That's where it's going to go. Okay, I'm afraid that's where it's going to go. NASDAQ 100 now, this is interesting. It is 2 standard deviations below its long-term or decade-long average. Could that be time for a bounce? Well, it can go a bit below that and then come up. I think it'll actually go a lot more below that, but we'll wait and see. One thing I know, I don't need to predict the future. What I do need to know is, do I buy into something now or do I wait a week? I'll wait a week. Why not be so patient? Especially when you look this good in yellow. Thank you very much. Have a look at campaignforamillion.com. Like the video, subscribe, because every time you subscribe, a little angel gets its wings, I'm told. So make sure you do that and follow me. I mean, follow religious leaders, but follow me as well on social media, I meant, not just sort of a spiritual sense. Thank you very much.